Anirudh, Garg, partner and head of research at Invasset PMS, joining in with us to talk about the market on the fundamental front as well as sector-wise. What is he finding attractive? Anirudh, good morning. Thank you so much for joining in with us on the show as well. What have you made of the earnings so far? We had so many IT companies come out with their numbers as well. Reema did give us a roundup a short while ago. Today we have Reliance in terms of heavyweight reporting its numbers. Any thoughts on both these things?
Thank you and very good morning. I think the earnings are more or less in line with the expectations that everybody had. Our focus is primarily on both the sectors that you talked about. I consider Reliance as a sector only in India. So IT and private oil and gas, I think both these sectors are not the flavor as expected. We see traction in other sectors actually right now.
Okay, traction in other sectors that you find as well. Which are these other sectors that you're liking? And, given that global scenario that we're seeing as well, right? The possibility of tariffs, we don't know where that is headed. Domestic front issues are also going on. So how are you seeing overall in terms of a picking of sectors? What would you prefer right now?
Okay, so first of all, when we talk about the global macroeconomic scenario and the domestic scenario that we have on the LOC as well. So my experience of the last 16, 17 years has told me that whenever there is so much confusion, just focus on the growth. So we are focusing on growth and where expected growth is for the next 2 to 3 years. The first sector that we like, it is the CDMO and the CMO sectors. Look at the Laurus Lab results yesterday. They were in line with expectations and phenomenal. And we are expecting the same for other companies into this field as well. Apart from that, we like stock market intermediaries, all these into financial market infrastructure, be it an exchange or a depository or a good broker or a wealth manager, because somewhere the re-rating of this sector is being done. It has been done a lot, but I think there is still more steam to go as the market is, and the Indian market and the retail is developing over time. We've seen a significant shift from the FD culture to, the equity culture. Apart from that, the more these confusions of the global macroeconomic front arise, the more opportunities also arise. So if there is tariff war going on, we have to look for those companies which can benefit. So we are focusing on leaders of various sectors which have possible benefits out there. So something like a textile is one of those factors. And somewhere this market, all this confusion has led to a good, healthy correction in the market. And leaders of various sectors, be it consumption, be it defense, be it retail, all these companies are available at a massive discount right now. So I think we are in a comfortable zone. And if we have a 2-year vision from here, I think a good, healthy double-digit plus return will be, a CAGR will be seen.
Anirudh, is Reliance a part of your recommended stocks? It's such a large cap, and it's such a large weightage on the index. And what would drive an outperformance from here on for Reliance Industries? What exactly are you watching out for when it comes to the numbers this time?
Until and unless we feel that the markets are superbly expensive and we need to take a shelter, we do not go into these big shares. So our focus is generally to find those I would say mid-cap stocks that would, in a couple of years down the line, or maybe 4 years down the line, would convert into a large cap. So we never hold stocks like Reliance as per se, until and unless there is an extraordinary opportunity to be seen. We do not find any extraordinary opportunity in Reliance for say. I think it's a healthy company, but too many businesses, and sometimes it gets a little bit, you get away from the track. They're into good businesses, but these businesses take time. And apart from telecom, I do not find any business for Reliance, especially in the scenario that we are seeing crude, not bullish on the crude for the next couple of years. So we are not very bullish on Reliance from here. But I think, it'll be a market performer, not an underperformer or an overperformer from here. There are much better opportunities out there.
Okay, much better opportunities that are there as well. Earlier we had my colleague Parikshit, who actually spoke about, Apple having more of the production in India. So is that a story that you would be looking to play? Is there anything on that front that you find exciting as well?
When we look at we call it neighbors plus one, not just China plus one. So we are seeing a lot of traction in textiles when it comes from the problems in Bangladesh. And the trust factor, India has the trust factor, but along with it, the reality on ground is that you need companies and sectors which have developed over time. So if we see in India's, the easiest way to look at it is what are the sectors that have led the previous bull runs in India. Those were the sectors which have, developed over time. So be it textiles, be it IT, be it pharmaceuticals, these are the sectors that India specializes in. And now when there is a global opportunity, these will be the people who will be first and early to capture those. For example, something like a semiconductor, there is an opportunity there, but India does not have the required infrastructure right now. Infrastructure will come with time. So let's focus on those companies which are already having a footprint and specialize in what they do. So since there is an opportunity, I think in reality, these will be able to capture them better.
Okay. And Anirudh, I was reading some views that came in for you as well. You were earlier saying that you re-entered the market and you booked your profit in the small cap and the euphoria that we saw last year. You booked your profits that time and then you re-entered the market somewhere around the 22,000 levels. Right in the last couple of days, maybe also we're seeing some bit of a profit booking. So your overall thoughts on the market, if you could just leave us with that.
So the reason for us exiting the markets was firstly the valuations were very, very high and everybody knew that. Along with it, what we focus a lot is on behavioral finance, and we could see a lot of exuberance in terms of the greed that we saw in people, especially our clients, even us as fund managers. So we have our quant systems in place which are able to capture it in a better way. So we took an exit call in December and we entered at the 22K levels because both the sides flipped. The valuations were comfortable. We were getting the portfolios 30-35% cheaper. The small cap, mid cap index were 20-25%. The Nifty was around 20%. So this is what we look into. And the greed that was there has turned into extreme fear now. Trump tariffs. The situation at the LOC, there is a very simple rule, and it has helped us over the years, that markets in a bull run, they feed on bad news. And as I was talking to one of your colleagues as well, that to make solid bottoms, you need a good bad news, if I may say so. So a strong bad news, if that's the right word. So I think we are in a period of consolidation, and each dip that comes now, because the valuations are okay, there is no greed in the market right now. So somewhere we should be entering at lower levels. Every opportunity, every dip for us is a buy right now.
Every opportunity every dip is an opportunity that comes into buy. Anirudh, one more thing I just want to talk about, a sector that you've spoken about, you're highlighting is financials, right? So I want to understand in financials, what are you finding exciting now? We have HDFC, ICICI Bank, which reported a good number. Axis Bank on the other side, not that great, right? AU Small Finance Bank in its con call mentioned about how those MFI issues are easing now. So what are you liking in this space specifically on the financial side?
Okay, when it comes to the finances, we are liking the leaders right now. So we like the public sector banks, especially the bigger ones. I think even with the Axis Bank not having numbers as required, I am still not bearish at the bank. I believe that's a very good management and things will get better from here. When it comes to the big heavyweights like HDFC or Kotak or an ICICI, wonderful numbers, wonderful technologies being in place. I think we have the best managed banks in the world. And apart from that, quality NBFC is also something like a Bajaj Finance. Disclaimer that we may have positions here and we may increase or trim them anytime, but not a recommendation to buy and sell. But yes, all these quality NBFCs are also looking good from here. So for us, finance is a major part of our portfolio, and we are bullish on finance for the next couple of years.
Thank you very much, Anirudh, for joining in. Need to get into a break on that note. On the other side, we get you the latest related to the Pahalgam terror attack aftermath. Stay tuned.